Hi, this is James Shug with Westpac London's end of day report for Wednesday, March the 7th. Well, we saw a bit of a stabilisation in markets today after yesterday's very steep declines across equity and commodity markets. The release of economic data in Germany, which was soft, and the US, which was quite upbeat, was really of only momentary or passing interest, it seems, to markets, with most of the focus still on the Greek debt swap and the extent to which it will be taken up by private sector bondholders or creditors to the Greek government. Now, the word today was that Greece would probably get there in terms of the number of or proportion of bondholders that would actually accept the swap. But frankly, I'd challenge anyone to really claim they fully understood exactly what percentage needs to be achieved for take up by what time to ensure that we can rule a line under this sorry episode, which is part of the bigger European sovereign debt crisis. But as I say, very modest gains in markets today after yesterday's huge decline. So I think that there's still an element of wariness about the Greek issue, which could still turn nasty. We've also got the European Central Bank coming up tomorrow with its policy decision. We're not looking for any change in rates, but we do expect the ECB to publish new staff economic projections, which should include effectively a recession, a shallow recession, minus 0.3% GDP growth in 2012, as the base case scenario for the ECB, or at least for their staff who compile those projections. That would bring the ECB into line with other major international organisations such as the EU Commission, the World Bank, who have already recently published numbers for Europe, which include a negative, modest contraction for economic growth this year. Our view is minus 1% for 2012. We think that there is more bad news to come related to budget deficit reduction, the austerity measures, the necessary microeconomic reforms, which will further impact negatively on the growth story in Europe. But at this stage, we'll just be comfortable or happy to see the ECB formalise recession, even a mild one, as its base case scenario. In terms of the data today, as I mentioned, German numbers on orders, January orders, factory orders, were very soft. We saw a 2.7% fall. That pulled the annual growth rate for orders to minus 5%, which is the weakest since 2009, and which is around where orders are running in the first couple of quarters of the recession in 2008, before global trade absolutely collapsed at the end of that year. So that's another indicator that's consistent with Germany continuing to be in recession at the moment. We know Germany contracted in the fourth quarter, but there's some speculation that maybe the first quarter of this year, the quarter we're currently in, might see a modest positive on growth. Our thinking is it'll struggle to be a positive. The US private sector payrolls report from ADP showed an increase of 216,000 in February. There were some back revisions there, but the 3-month average for jobs growth in private sector jobs growth on that measure is running at 219,000 over the latest 3 months, which is a little bit stronger than it was running at this time last year. So that's a further indication that the US jobs market's doing somewhat better, or has been doing somewhat better in recent months, and certainly there's no indication there, or indeed in other measures of the labour market, such as initial jobless claims, where we get an update tomorrow, that the jobs market's running out of steam, like it did after the burst of strength that we saw in the early part of 2011. But as I say, those reports weren't particularly impactful on markets. Just to give you a feel for markets today, we've got the London market up 0.25% at 4 p.m. London time, so with another half an hour or so of trade to go. The French market up 0.5% today. The German market up 0.2%. The Spanish market, however, down 0.6%. Now recall, those moves compared to losses of between 2 and 4% yesterday, so very much dead cat bounces there. The Dow in the US currently, well, what's that, about an hour and a half into trade, up about 0.2% at 12,781. In terms of commodity markets, we're looking at a slight decline in copper prices, down 0.07%, so effectively flat. But oil prices up 0.1% at $104.84 a barrel, and gold prices up 1/3%, $1,677 an ounce. Again, very modest moves there compared to the sharp declines that we saw yesterday. The Aussie dollar, it's on 1.054 against the US dollar at the moment. It's held above 1.05 over the last few days. It got close to that level when we had the release of softer than expected GDP numbers for the fourth quarter. Came in at 0.4%. Thank you. Someone almost walked in front of me. Tonight we get jobs and unemployment figures. Looking for a 15,000 fall in employment, a 5.2% unemployment rate. If we're right, that would be an early indication that the labour market softness that we've seen through the latter part of 2011 and into the early part of this year is continuing, and if it does continue, we think that ultimately will make the case for the Reserve Bank to cut interest rates again, probably around May or June of this year. Okay, that's about it for today. Back tomorrow where we'll get the, as I say, the ECB decision, also the Bank of England, and an update on the success or otherwise of the Greeks in terms of getting their creditors to agree to that bond swap. Okay, I'll be back to talk about all that then.